All right, let's talk about the Diwali dhamaka that we are seeing in the IPO space. A slew of offers out there for you over the next week or so, and all of them vying for your attention. The IPO space has anyway been buzzing all of this calendar year. Massive amounts of money have been raised. Now the question is it worth your while? Have IPOs really done well enough, and which are the ones that are coming next? Now Nykaa opens tomorrow. Their price band is between 1,025 and 1,125 rupees per share. They want to raise about 5,350 crore rupees. The big one, of course, is Paytm. Will open from November 8th. It will be the largest IPO to date, larger than Coal India, which was the previous record holder. Its price band is 2,080 to 2,150 per share, and they want to mop up over 18,000 crore rupees. Policy Bazaar also opens November 1st. 940 to 980 rupees is the price band, and Fino Payments between 560 rupees to 577 rupees. Now the question is, do these work for you? Which are good, which are not, and why are all of these companies rushing to raise money? Pranav Hal, the IMD of Prime Database, is joining us on the show. Karan Taurani, SVP of Elara Security, is also with us. Great to have both of you to speak with us on the India Development Debate. Welcome. Pranav, let's just begin by getting an overview. It has just been crazy as far as IPOs is concerned, isn't it? Tell us what the figures look like.
Well, to answer the first question that you raised, that why are these companies rushing to the primary market now? So if we look back historically, primary markets have always chased the secondary market, albeit with a lag of 3 to 6 months. So whenever you find bullish secondary markets, you've always seen a rush of companies looking to tap into the sentiment at that point in time and looking at raising money through the market. This year, just to give you some numbers, it's been stellar, of course. We're already at 80,000 crores of funds being raised in this calendar year.
Pranav, I think you've gone on mute. I can't hear you anymore. All right. Till Pranav sorts out those audio issues, let me go across to Karan Taurani. Karan, we'll have Pranav back in a minute with all of those big numbers of what the IPO space has been looking like this year. But let me begin by asking you about the issue opening tomorrow, which is Nykaa. What's your view on it?
So I think, Nykaa is, we have a subscribe rating, on the company, and the business model of Nykaa is actually very, very compelling. So some of the metrics of Nykaa are very good versus competition. So if you look at the order values, they're almost 40 to 50% higher in terms of competition in the BPC space. That's one. Secondly, if you look at the resilience of the business model, I mean, FY21 was a COVID year. And we did see decline across order volumes, on various other internet companies like Zomato. But Nykaa, despite, beauty and color cosmetics being a product which is used when people, go outdoors, and despite that segment probably seeing a sharper decline because usage had come down, order volumes for Nykaa were flattish. So that's the second thing on Nykaa. The third aspect on Nykaa is, the profitability aspect. So this is a company, pure play internet company, omni-channel based company, which was profitable even before the pandemic. So it's not that the pandemic has kind of reversed trends. So most of the growth trends patterns in Nykaa are sustainable. Last but not the least, I think is the approach towards the customer. I mean, they've got really innovative marketing efforts, some very great content strategies. And if you look at the customer base, I think it's quite loyal. So I think the customer has got a very good trustworthy factor with Nykaa. Nykaa also has sort of ties with many large premium exclusive brands in the BPC space. So I think basis all these multiple drivers put together, I think Nykaa should command a very big premium versus its global counterparts.
Yeah, but Karan, what about the price band, 1,025 to 1,125? Some brokerage houses think that it's a little on the steep side. Yes, They're making profits compared to their peers in this space. At least they're not a loss-making company which is coming to the markets, and the markets seem to have forgiven those as well. They're not burning cash at that high rate. But even then, what is your take on the valuations?
I think the valuations definitely are on the premium side. I think we saw that with Zomato as well. And the market today is such that there is a huge scarcity premium attached to any internet company. Because you can actually count the large internet companies in India today, which are listed as compared to other developed markets wherein there are large number of companies which are there. So there's enough to play in terms of number of companies. So I think scarcity premium will remain for the internet space unless we've got large 20, 30 names in terms of internet companies which are listed. And also, I think clearly you have to look at the India demographics as well. They are very, very favorable, whether you call it the number of smartphone users, time spent, consumption, penetration into the tier 2 and tier 3 markets. So I think all these factors augur really well for Nykaa. So that's the reason I think the valuations are premium and they do deserve that. But listing gains, definitely will come in for Nykaa. But the point is that going ahead from a medium to long term, there's still a lot of work to do for Nykaa. Because the kind of valuation multiples it is commanding today, and even after listing gain, it will probably list at a further premium, and probably the valuation multiples can even expand, towards the 12 to 14 times EV sales. I think beyond that, there's a lot of work to do because they have to really expand their offering. So clearly, a BPC-based company or a niche, a segment-focused company, internet company cannot command such a huge premium multiple. So I think the investors are really betting big on the fashion segment, which is the next upcoming thing. So if you look at the fashion segment, there are triggers as well because the order value of fashion is about 50% higher. Average order value is 50% higher versus the BPC segment. Frequency rate is also high there in the fashion segment. And fashion, as you know, is a bigger market in terms of as compared to BPC. It's double the size of BPC market. So I think basis all this, there's a huge opportunity there in fashion. But again, nothing comes easy. There are multiple risks also which are there in the fashion segment because the fashion segment is heavily fragmented. There are larger incumbents present here. You will probably have to go and give more of discounting in the fashion segment if you were to really stand out in this market. So we'll have to wait and watch in terms of what. Yeah.
Absolutely, Karan. The fashion segment. The fashion segment has a complete glut right now, and it's not going to be easy. The other question is that they want to raise some of this money to open retail stores. Should they be doing that? So I'll come back to you on that. But meanwhile, I've got Pranav back. Pranav, can you hear me? Pranav?
Am I able?
Yes, now you are. Great. We have Pranav Haldia back. Okay. Pranav, so, you were making the point about why we have such a surfeit of IPOs and they've done well. They've raised a large number of, funds this entire year. Have they worked for investors? Have investors made money on a majority of these IPOs?
Well, if you talk about listing gains, so in 2021, the average listing gain is at around 30%. If you look at the IPOs which hit the market in 2020, the average listing gain was 44%. In fact, if you look at bulk of the IPOs over the last 3 to 4 years, they have delivered positive returns. But at the same time, we need to keep in mind the fact that right now we are at all-time highs, and hence, obviously, there would be more IPOs which would be showing a positive rather than a negative.
All right. And Pranav, do you want to venture to make any comment on the slew of IPOs right now? We've got news earlier this evening that the big boy, Paytm, is also coming up with its offer. They've announced their price band. November 8th is when they open. What kind of an impact does that have on the primary market when someone comes in to mop up over 18,000 crores?
Well, this point has also been raised in the context of the LIC IPO, which is going to be obviously a mega offering. And, people have commented on what impact it would have on the secondary market. In my view, I think there is enough and more liquidity. In fact, we just have to look at the last 12 to 15 months, wherein you've seen over 1 lakh crores being raised through the primary market, while at the same time the secondary market is at all-time high. So, the argument that a large issue sucks out the liquidity from the secondary market, I think is a dummy. As long as there are good quality issuances which come to the primary market at attractive valuations, there is enough and more money which will chase these deals. I mean, we have to remember that India is a very tiny asset allocation for some of the large global investors, and it is one of the growth markets. So if there are good quality companies which continue to come to the primary market and the valuation is good, you will see demand. And at the same time, I expect that not to necessarily have an impact on the secondary market.
Okay. The other question then, Karan, is that all of these IPOs are coming together. So between 28th of October and 8th of November, so barely in 10-12 days, you have 4 major IPOs which are going to be vying for investors' attention. Do you think that some will fall by the wayside?
So I think for any internet company, it's very important to monitor the factors, around that company and where the company stands in terms of the market structure. So I think there are 3-4 factors, one can actually evaluate in terms of whether the internet IPO deserves a valuation multiple, whether it will stand out, what will be the performance post listing. So I think one very important part is the market structure, whether it's a duopoly market or whether it's a fragmented market. If it is fragmented, what are the kind of cost structures? When will the company showcase the visibility in terms of profit? The second factor would be in terms of the management capability. I think that's a very good, way to, also assess the company in terms of what is the strategy, how were the strategies in the past, did they fail, or were they kind of proactive in terms of, adopting the failures and moving to other different kind of strategy. And third thing is, of course, benchmarking to global peers. So I think we all know the India market will definitely have a premium versus global markets because the growth rates here are at a huge premium versus the developed world here. So I think these 3-4 factors or these 3-4 elements are very important to judge. Also, one more thing is the innovation or the kind of irreplaceability of that business model, because currently in the internet era we are in such a space right now that every business is kind of getting replaced very easily, and there's too much innovation. I mean, we don't know how technology changes in the next 3 to 4 years. So I think how the business is able to adapt, how the business is able to innovate, that's also one very big factor to watch out before considering valuations in my view.
Karan, would you rank these 4? What would be your ranking for the 4 IPOs that we've talked about coming in the next 10-12 days, from favorite to least favorite?
So I think my favorite, currently would be Nykaa, basis whatever premium valuations they are coming, because, I feel that they have a competitive edge. The second favorite for me, would be Paytm, because Paytm really has, the potential of becoming a super app. I mean, we also did some primary checks and we really got to know that the number of visits on super apps are almost 20x as compared to niche apps. So I think super apps is the future in the next 5 years, and Paytm has got a huge potential there. We've seen what's happening globally in the places like China and all, wherein Alipay has a huge, number of customer base. So I think that's the next big thing, and then it would be Policy Bazaar and Finopay.
Okay, Pranav, I know you don't like speaking specifics on IPOs, but I'm going to ask you that question as well, because frankly, that's what viewers want to know about. How would you rate these 4, favorite to least favorite?
Well, so, I won't rate them, like I told you earlier, but one word of caution to retail investors. I have constantly said that retail investors should primarily come through the mutual fund route to the market. If they want to take more risk, that is when, they can invest in direct equities in the secondary market. And if they want the most amount of risk, that is when they should look at the IPO market. We have to understand that these are unlisted companies. There are lesser disclosures in the public domain. There is, huge amount of information asymmetry, and there has not been a true price discovery. So, investing in IPOs is a gamble. I don't think retail investors have the capacity to valuations. So in which case they should follow the institutional investors and how they are investing. But if at all they are, do decide to go direct into IPOs, then they should come in from a long-term perspective and not come in for listing gains. And they should look at the company, the financials, the existing investors, if there are any private equity and venture capital investors who have already invested in the company, and looking at corporate governance and the promoter background as well.
Right, so that's your word of caution. Do your due diligence before you decide to come in. But yes, if you do want to look at some of these companies, this is a good period. There is a lot on offer for you and a slew of other IPOs, of course, following this period as well. But the Diwali dhamaka on the primary market is definitely here. Thank you so much, Karan and Pranav, for joining us on this discussion. Since